The Dentalpreneur Podcast. Okay, doctor, it's time to put down that handpiece. You're listening to the show dedicated to helping dentists get their lives back. It's time to decrease your stress, increase your profitability, and regain your passion. Now introducing your host, Dr. Mark Costas.
Hello, everyone, and welcome to another episode of the Dentalpreneur Podcast. I'm your host, Dr. Mark Costas. What is up, my friends? I hope you're doing great out there today. Well, we went straight from summer to winter here in Prescott, Arizona. It was 27 degrees when I left my house this morning, and it is colder than I want it to be. But aside from weather, I'm very excited to be in the office in Studio B3 this morning because I just met a brand new friend, and we have a lot in common. He has a very interesting bio, and I can't wait to dig in. Adam Marburger is the co-founder of the Dental Protection Group, and he is transforming the dental industry with innovative captive insurance solutions. A passionate entrepreneur, Adam has created impactful opportunities for dental practices and labs. His expertise and commitment to excellence have positioned the Dental Protection Group as a leader in tailored insurance solutions. Outside of work, Adam enjoys time with his daughters and practices Brazilian Jiu-Jitsu, proudly holding a black belt. Adam, welcome to the podcast, buddy. How are you, man?
I'm great, Mark. Thanks for having me. I'm excited to be here.
Yes, I'm so excited to chat with you about so many different things. We were talking off air right away. I got into your Brazilian Jiu-Jitsu background, so I want to end the interview with that. But I want to start with kind of your background as an entrepreneur, how you got into dentistry in the first place, what led up to the founding of the company that you now own.
Yeah, would love to go there. So I'm a recovering car salesman. Let me just get that out there.
Oh, no kidding.
I got sucked into the auto industry at age 18, fell in love with it, gravitated to the finance department. I loved working with numbers and helping people and getting loans approved. And so I got really involved in finance. I did it for 17 years and was able to retire and go out and start other companies. And what I ultimately did was I segued from the insurance space of the side of automotive and started a company, Ascent Dealer Services, which we offer financial solutions, insurance solutions to car dealers, RV dealers, power sports, and boat dealers. And then dental showed up, and it was just a bizarre opportunity that now we're in love with. So what happened? I was speaking at a very large automotive conference, and about an hour and a half before I took stage, a friend of mine who also owns an insurance company, he's a competitor of mine by the name of Max Zan, and he says, "Hey, I got an idea I want to pitch you on." I said, "Okay, look, I'm all ears." So we sat down. He said, "What if we do exactly what we're doing right now, and we go into a vertical that our program doesn't exist? Would you be interested in looking at that?" And I said, "Sure." He goes, "It's the dental industry." He goes, "I've sat down with doctors for the last 2 years, shared my idea and my concept. They think it's bulletproof, and I want you to be my partner." So that's what happened. We made a deal. We co-founded the Dental Protection Group together, and we took an insurance concept, an 831B micro captive insurance concept. We took it from other industries and just inserted it into dental. And it's been a fun ride so far. What a brilliant industry this is.
That is awesome. Okay, so tell me more about this 831B captive insurance. What exactly is it? Explain it to me like I'm in kindergarten, because sometimes that's where my head is anyway.
Yeah, so I'll start here. Let's break down how insurance companies make money. I think it's best to break this down. So for instance, I have State Farm. This year, I will pay State Farm close to $6,000.
Okay.
This year, I've paid no claims. I've had no claims this year. So State Farm is going to take my $6,000. They're going to invest it into the marketplace. So now they're going to take my $6,000 and make investment income on it. And the magic is they're going to pay absolutely no tax on the premiums that I paid them because there were no claims. So now the premium turns into what's called underwriting profit. And underwriting profit by law is not taxable. So what we do is we create insurance companies for our clients. And we basically, we'll use the example for dental. Our 5-year limited warranty, it takes care of the patient for 5 years for the total cost of the procedure. There's a lot of patient-facing benefits that we can get into. But really what we're doing is we're taking these reserves, the total cost of the warranty, the practice owner, it's theirs. We put it in a brokerage account. And after claims are paid in that brokerage account, our dental practice owners get to keep those funds and not pay any tax on it. And it's all because of an election that we take with an IRS called an 831B election. Basically states that the captive insurance company owner is only going to pay tax on investment income and no underwriting profit. So that's baseline stuff on kind of how it works.
So you pay tax on the dividend income from the from what you collect from the premium. So you're basically taking premiums for a warranty that you sell, and then you're investing it. What's taxable is the proceeds from the investment, not the original seed capital that you put in there.
Correct.
Okay.
Very well stated. That is absolutely correct, Mark.
Okay. So you are passing on this cost of the warranty program. What the product that you're selling the patient, the recipient of the clinical care is the premium.
Correct. So here's how this has worked.
Okay.
When we entered, we had fee-for-service practices in mind. We built this program for fee-for-service.
Okay.
So let's just say you do a lot of crowns, right? Mm-hmm. And let's just say, historically speaking, you've charged $1,000 for the crown. Okay. Mm-hmm. Well, we allow our practice owners to charge up to 15% of the cost of the procedure will equate to the cost of the warranty. That's the max we allow. We've had doctors want to charge more. We can't do that. So 15% is the max of the cost of the procedure is the warranty. So in this case, we will now charge the patient $1,150 for the crown. Oh, and by the way, we back it for 5 years. If anything fails, it needs to be redone, come back, no deductibles. We take care of it at no cost to you. So the patient funds the program.
Okay.
This is a patient-funded program.
Okay, so let me work around the legalities here. So if you say, for instance, you're allowed to charge up to 15% for this premium, okay? Is that by law? Is that part of the 831B?
Our actuarial studies show that 15% premium is going to be the max that the insurance carriers will allow at this point.
Okay.
Because of the loss ratios, dentists do such great work. Mm-hmm. Because of the claim frequency and the loss ratios, they're so low. We can't let doctors go into that 20, 30. We just can't do it. 15% is the max. 10 to 15% is kind of that range we allow our clients to pick.
Okay. So does it only work with fee-for-service offices? Can you work it with PPO plans?
We can work it with PPO. Our go-to client is the fee-for-service, but we have found some PPO doctors that are willing to absorb the cost and give it to their patient so they can have that tax benefit. So basically, it's a shift from the left pocket to the right pocket. Left pocket, 40% taxation, right pocket, no taxation. So we've seen some doctors like that idea, but for the most part, fee-for-service is definitely our wheelhouse.
Okay, so do you have to credit somewhere or make the patient aware that the true cost of the crown is $1,000 and the $1,500, the $150 or whatever, 15% of that is for an insurance program? Or can you just say the cost is $1,150 and allocate $1,000 to taxable income and $150 to non-taxable income?
That's an awesome question. So this is not a service contract by definition. This is a limited warranty. And a limited warranty comes with the procedure. There's no itemization of a dollar amount. I'll give you an example. You go buy a new Toyota Camry. Mm-hmm. When you buy a new Toyota Camry, it's got a Maroni sticker on it that basically states that it comes with this warranty, and you will not see a line item on it because it's included in the cost of the vehicle. Same thing with this. So we are not bound to itemize it and show it because it comes with the procedure.
Got it. Okay. So do you encourage people to sell it as a premium optional to the patient, or is your business model that you just say, all right, just include it and then you remove 15% from your proceeds?
So I encourage folks to adopt this as a mindset in the practice. It's a culture thing because we don't want our people cherry picking. We challenge our doctors to put it on all procedures, make it a culture thing. Mm-hmm. Because what we can do with this is we can market a little bit different online. We can beat on our chest a little bit and say, hey, we do such great work and we really care about our patients and we believe in what we do. We back everything with a 5-year guarantee, no questions asked. In this, there's benefits to this. So I challenge for the doctor that has the oh yeah or aha moment, that sees the dollars that you can make on this program. I challenge you to adopt it and put it on every single procedure, not to cherry pick, and we cover every procedure.
Okay. So what does it look like to put in a claim then? So if something does fail with the crown within 5 years, then the patient is going to make a claim. Does that claim count only in your office? Do they get to bounce to another office and then call and say, I'm under limited warranty at Dr. Costas's office, but I moved to Texas and am I allowed to use this at this new Texas dental office where I'm at?
That's a great question. So what we did was we put 100-mile written in the language of the contract. There's 100-mile radius where the patient has to come back and see you. But here's the thing with this program. It has a retention piece built into it already, to where your patient has to come back and see the doctor every 6 months is what we're finding. We let the doctor decide the interval, but we're finding everybody selects 6 months. So the patient is constantly going back in anyway. And so if the patient were to move outside of a 100-mile radius, you can absolutely take it anywhere. This is a live insurance agreement, and we truly wanted to make it patient-centric. Last thing we want is for somebody to move out of town and then now they're on the Yelp or the Google. They're upset that their warranty's not covering anything. And here's another thing, Mark, in the captive insurance space, we want claims. So if our patient moves across town and they have a claim, we pay that claim. We pay it within 24 hours with a virtual credit card. There's no questions asked. There's no friction in the claims process. But to answer, that was a long-winded way to answer your question. Yes, if your patient moves out of town, we will cover that claim.
And what happens to your investable 15% if several claims are made? Does that remove any of your capital from the investment that you have made with the 15%, the accumulated 15%?
Great question too. So here's how this is going to work. Doctor decides to sign up with our program. Okay. We are going to set up an insurance company and the name of the dental practice only on paper. Okay. So we're going to set up an insurance company and then we're going to set up a brokerage account with Morgan. Raymond James, Morgan Stanley are the two household names that we recommend. So we're going to set up then a brokerage account that the insurance company owns, that ultimately the dental practice owner owns. All right. So every single month, we're going to write policies and those premiums go into that brokerage account. That's where all claims are paid from. So the dental practice owner is in complete control at all times. It's their money and claims get paid out of that money. The dental group is only allowed to touch that brokerage account to pay claims at the letter of the law. That's all we're to do. That money sits there. We also, talking about the investment side, Max and I and our team, we don't make investment decisions. We don't make recommendations. Depending on the risk tolerance of the practice owner, they can decide how they want to invest. But all funds to pay claims come out of the brokerage account. That's where it comes. Everything comes out of that account.
Got it. Okay. So to your knowledge, is anybody else doing it this way in dentistry? Because there's some other dental warranty type programs in dentistry. Do they operate the same way with the 831B?
No. So it blew my mind, Mark. Whenever Max came to me and pitched me on this idea in Vegas, I said, sure, Max, I love the idea. I'm a psycho for business. I'm willing to try something new all the time. But I didn't believe what he said. He said that nobody was sharing the underwriting profit back with the dental practices. He said there's a few warranty companies out there, but they're keeping the funds for themselves. And so here's what we did. We went to Serona. We went to Greater New York. We went to then Yankee. We went to Chicago Midwinter. We exhibited. We did all the things. We met all the doctors. We did it. And we found out, no, it didn't exist. So to answer your question, no, we are the only company that is truly sharing the underwriting profit back with our client. We get paid on fee income. We make a small commission on every contract that's ever going to be sold. Just that's the way we set it up. And the premium and the profits are shared back with the practice. So we just give it back. So to answer the question, no, we're the only ones. We're the only ones doing this.
Got it. Okay. So maybe we can work through a case study. So tell me about a fee for service practice that's doing, say, $1 million. Okay. In collections per year. You'd have to remove probably the hygiene, income. So remove 300,000 of that goes to hygiene. There's nothing really, warrantyable from a hygiene visit because you're not putting any prosthetics in. There's no restorative. There's not really a procedure to warranty in hygiene. They're cleaning teeth and they're removing infection, et cetera. Okay, so let's just say we have $700,000. This particular dentist decides to take you up on your model, and 15% of all of the restorative work that they've done is going to be part of this captive insurance model. So what does that look like? Work me through the math on the $700,000 per year.
Well, you're going to have about $100,000, a little over $100,000 in premium. At the end of 5 years of writing, you'll have about $500,000. You'll probably earn $150,000. So that's probably a $650,000 swing for a small practice, writing the program for 5 years and then shutting it down and not ever writing it again. And that's assuming too that 1 out of every 10 procedures fails. And so on our pro formas, we're very conservative. We know that 1 out of every 10 is not going to have to be redone. Mm-hmm. So, and we're also in our pro formas, we only use about a 7% return on investment, which we all know the last few years, the bond market's been so strong. It's not been that difficult to get 10, 12. So a small practice, I'll tell you, a small practice, I'll give you another example. In every one of our presentations, we use this conservative example, a practice doing 100 warranties a month, just 100 warranties a month. Mm-hmm. In 5 years, you will have about $1 million in your account from investment income and underwriting profit. And then here's the magic. And here's another piece that is so cool about the program. Since the patient has to go back to the practice for the work, so we're taking money out of the brokerage account to pay claims. Well, that money shows up as ordinary income. So now we're writing the check to you guys. On that scenario, there was $120,000+ that's paid back to the practice. So now there's $1 million in an account after 5 years with $120-something thousand being paid back to the practice for claims. Mm. So it's a winner all around. I mean, it really is a great program.
The one thing I can't wrap my head around is the legality of saying, okay, there's the crown. Let's just do easy math. The crown is $1,000. 15% of $1,000 is $150. So are you telling the patient that the crown costs you $850 and there's a 15% premium? Are you legally obligated to do that? Or you just tell them that the crown plus the warranty is $1,000?
This is how this works. Mr. and Mrs. Patient, the total cost of the procedure today is $1,150. And the great news too, by the way, is we back this up for 5 years. In the event that anything happens and it needs to be redone, come in and see us. There's no deductibles. We take care of it. So it's truly, because it's a warranty. It doesn't need to be itemized. There's no legalities involved. It's not a service contract. It is a true limited warranty. So fee for service practice, there's absolutely no itemization needed. It's transferred to the patient. And the practice is that we have this in now, it's truly a culture and a training thing. It's more of a, hey, here's the cost. And oh, by the way, it's guaranteed for this. We're not getting questioned, and clients are so far loving it. Patients are loving it.
Okay. Interesting. So basically, if you're a completely fee for service practice, that 70% of the total income of the practice is basically eligible for this 15% non-taxable income. Right. And then you get the benefit of taking that, or not just the benefit, but you're mandated basically to reinvest it into some sort of a brokerage account that's going to yield X percent depending on what the market's doing and the vehicle that we select. And that percentage is what's going to be taxed, not the original 15%.
Correct.
Okay. Interesting. Can you guys tell that we haven't talked about, you and I didn't talk off air, so I'm just digesting as we talk. So this is a very unique idea and a unique concept. I've heard the whole idea of captive insurance before, but I didn't really understand the specifics of it.
It's brand new to dentistry. It's been around. This structure's been around since 1986. Lots of different industries, from solar, medical, lending institutions, car dealers, motorcycle dealers. Lots of walks of life use this 831B micro captive, just because every year the IRS continues to allow us to increase what we can put into these accounts. It's at 2.85 million right now. You can put $2.85 million into this reinsurance position on an annual basis, and I'm thinking January, February it'll be over 3 now. So I mean, this program is very new to dentistry, but it's been around for a very long time, and it's bulletproof. So it's been tested. It's a great structure.
Tell me how, just to further illustrate the point, tell me how it works in the car industry, since that's the industry that you used to work in.
Absolutely. So when you go in and buy a vehicle, hopefully it doesn't take forever and you're not waiting hours to go see the finance department. And then once you get into the finance department, they offer you all these different coverages, right? And we'll just use we use the term extended warranty, but the real term is extended service contract. And so basically when you buy these warranties, let's just say a warranty costs $2,000. Okay. And let's just say that the real cost was $1,000, but they charged $2,000. So they made $1,000 profit on it. Okay. Just for an example. So will that $1,000 cost, instead of giving it to the insurance company, there will be a $200 admin fee that comes off of it. And then $800 of that warranty goes into the brokerage account. Same concept. So as these warranties are sold every month, everything goes into the brokerage account. And then after claims are paid, which in an automobile, instead of us looking at 20% loss ratio in dental, we're looking at 50, 60% loss ratio in automotive. So there's much higher claims frequency in the automotive world, but it's the same concept. So there's all this money in the brokerage account. After claims are paid, all that money left over is not subject to taxation. Now the money earned on the investment side is subject to long-term capital gains. So it's the same thing with a motorcycle dealer or a boat dealer. They sell these warranties to the consumer. They pay a fee to the insurance broker. The rest of it goes in the brokerage account, and it just earns.
So the internet delayed there for a little bit. Let's go back to the numbers here. So $2,000 warranty, $1,000 of it is profit, and you're going to take some percentage of that and put that into the captive insurance plan. Are you calculating the 15% based on the total cost of the warranty, or based on the profit of the warranty?
In this scenario, it's the warranty cost is not a percentage. The warranty cost, there's a flat admin fee. So for instance, in that scenario, I apologize, it's been storming crazy here. Just magically happened when you and I get to talk, right? So on that scenario, $1,000 is a true cost of the warranty. There will be, say, a $200 or so, round about $200 admin fee carved out. And then the $800 is feeded into the brokerage account in that example.
Okay. Where does the 15% maximum allowable by law work into that scenario?
So in that scenario, there's not a 15%. So basically, the actuarial studies, it's completely different on cars than it is dental. Our insurance backer wanted to use a percentage of the cost of the procedure for their cost of their warranty. And the automotive, it's completely different. A Mercedes cost is going to be different than a Toyota Camry cost. That's why we do straight numbers. And then we take a straight admin out of those premiums to adjudicate.
I understand. So that came down to the underwriter and the funder of this thing, not a federal mandate that 15% is some magical thing that Congress came up with.
Correct.
Okay, got it. Okay. All right. Got to let me digest for a second. There's a lot of math happening here, but I do see the benefit of being able to take 15% off of the income that you get from a procedure and utilize that as a 15% tax break, right? So that basically that eliminates a big chunk of the income tax that you get from that particular procedure. And then the added benefit is basically you're forced to not utilize that 15% to do with it what you want, to go buy a new motorcycle or something like that. Rather, you are mandated to put that into something. It's basically a forced savings mechanism that's going to be put
we
to
call
use?
we call this, we try to dumb this down. This is a 401k on steroids that's funded by the patient, that gives the patient some really great benefits while also complementing and enhancing the practice. I mean, we're sold out on the product. Yeah, we love our company, just like we should all love our companies and what we do. But we feel we created something special for people. And, we know that dental insurance is not a sexy topic. I mean, I've not heard glowing reviews from dental insurance. And knowing the miserable reimbursement rates, and eventually a lot of doctors get to that fee-for-service place in their life, and being able to have this to complement their practice is a beautiful tool. We're proud of it.
Okay, so let's put our heads together and try to figure out how this could potentially work in an insurance model. Is it illegal to warranty a PPO model, or is the arithmetic too dizzying and you guys just don't want to deal with it?
I think from the feedback that we've gotten is it's very difficult because the profit margins are already low enough that it's very difficult to absorb the cost of this. We're finding that it's very difficult for especially young practitioners to just absorb the cost of it, even though that there's money that will be floating in a tax-friendly environment. The profit margins are too low. They just can't do it. That's the feedback I'm getting on the street. The feedback that I'm getting too is, you can always, take the cost of this warranty and maybe potentially put it in, a special code and try to get reimbursement or have the patient pay out of pocket. But we didn't originally design this program for that. I would love to wrap my head around this, Mark, with you to figure out a foolproof model in the insurance world. But right now, I mean, we're really heavy on the fee-for-service side, but open-minded. We're open-minded.
Yeah, I wonder if you could have an option for the practitioner. And again, guys, everybody listening, we've talked about this for the very first time. This is just presented to me for the very first time. So this would be the typical boardroom session, brainstorming session when I'm talking about a new kind of business opportunity. All right. So you guys are listening to me think out loud here. What if there was a way that you could have the practitioner put a certain percentage of their income towards this? For instance, if the PPO crown reimbursement is $900 instead of $1,100, maybe the practitioner says, I will warranty this on behalf of the patient at 10%, maybe. And then, so they're paying $90 and they're just using that as a tax break and a forced savings mechanism, that as if they were contributing to their own 401k. Would that work? Or does the math not work if they're actually paying for the warranty?
I think you might be onto something there. This is one of those things, though, too, with this being a limited warranty, we would want to make sure that we offer this to everyone. We would not want to cherry pick this. Now, if we created a service contract, an actual warranty that can be itemized, and there's an actual dollar amount next to it, then I think we would have an easier opportunity to figure this out in the insurance space. But what we created was a limited warranty that just kind of comes with the procedure. I think you're onto something. I think, I could totally nerd out on this and get my insurance backers, and I'd love to have a boardroom conversation, because if we could crack the code in the PPO space, Max and I would be, we'd be excited to do so.
Yeah, you also might be able to break it into tiers, right? So that the other warranty companies don't mandate, or they don't select out for PPO. They charge everybody. So you could just say, okay, for all fee-for-service patients, it's included. For all PPO patients, we're going to present it to everybody, and if they accept, they accept. If they don't, they don't. So they get charged an extra 15%. And the rules are that this work is warranted for 5 years, but you have to show up for your cleanings every 6 months to make sure that we're maintaining the work or something like that. I don't know. Yeah. I'm just thinking out loud.
There's something there. There's definitely something in there. And the thing is too, it's what we got to find out is, from a compliance standpoint, if we charge, Billy, Bobby, and Susie, but then we didn't charge Tommy, we got to really dive into legalities on what's fair, what's a fair deceptive practice. We want to make sure everybody has the same opportunity for the coverage.
Got it.
We want to cover all of our bases on that.
Right. Yeah.
But there's something there. I smell what you're stepping in, and I like it. So,
and then there's a further opportunity, right? You've heard of kind of membership plans within fee-for-service practices, or the fee-for-service element of a practice would be able to pay, say, $300 for the year for basically a membership plan. They get a couple cleanings a year, a couple emergency exams, and they get across the board, say, a 15% discount off of normal and customary fees. What you could do is work that into the membership plan. So for their $300, not only do they get 2 cleanings, they get 15% off usual and customary fees. They also get this warranty built into it. So they could add that as a benefit to the membership plan that they're selling to the fee-for-service patient.
Huge value add. That is a huge value add. There's a lot of sizzle to that. There's a lot of marketing you can do behind that. You can definitely get jiggy with it with your social media campaigns.
Yeah. Well, cool, man. All right, let's transition. Now I want to talk about jiu-jitsu now. So tell me a little bit about your martial arts background. Let me just position your accomplishment as a black belt in Brazilian Jiu-Jitsu. I think what happened with Chuck Norris and Bruce Lee back in the late 70s, early 70s actually, is that they turned martial arts into this worldwide phenomenon. And, people in suburban USA wanted to get involved with what Chuck Norris was doing, and they watched Bruce Lee movies. So they were joining these, strip mall martial arts studios. And, Susie that came in as a 9-year-old was guaranteed to have her black belt by 11 years old. Right. And so it diluted the whole value of the belt classification in martial arts in general. Right. So you have Shotokan, you have karate, you have all the different types of martial arts that came from different areas of the world. There's Filipino martial arts, there's Israeli martial arts, there's Japanese martial arts, there's Chinese martial arts. Brazilian Jiu-Jitsu was originated in Japan, and it merged with a Brazilian kind of twist to it, and it created this whole new art form. In my opinion, from what I've seen as far as belt classification and belts awarded, it's the purest form that has never been diluted. There's something about Brazilian Jiu-Jitsu that has maintained its integrity. Like, it takes a good decade to get your Brazilian Jiu-Jitsu black belt. BJ Penn got his in 2.5 years or something like that. And he was like maybe one of the most talented grapplers of all time. And he was just a phenom, but it just doesn't usually happen that way. So when I say that somebody like Alistair McDonald, you guys know Alistair, and Dr. Jamie Tobin in Phoenix just got his brown belt. Those are real accomplishments. And so whenever I run into a Brazilian Jiu-Jitsu black belt, whether it's in the MMA world or in the business world, I have to give full credit. So congratulations on having your black belt. I know personally, off air, you and I talked about it took you 12 years, and that's solid work. So, So tell me about your journey into Brazilian Jiu-Jitsu, and sorry for the long context there, but I just feel like it's important for people to know how hard it is to achieve this accomplishment.
First of all, I'm glad we brought this up, and you laid the groundwork perfectly, because a lot of people truly don't understand the differences in the martial arts, and I am a little biased. I do think Brazilian Jiu-Jitsu is the most effective. I think everybody should have some striking skills, some grappling skills, but Jiu-Jitsu it's a journey. It's a marathon. It's definitely not a sprint. And I started at age 17 kickboxing and boxing, and then I got into the MMA scene and started doing MMA fighting. And eventually I got into Jiu-Jitsu, Brazilian Jiu-Jitsu, and I fell in love with competing. And I did worlds. I've done worlds 11 times. I've competed all over. It's my life. It's my love. I opened up a martial arts academy in 2017 near St. Louis, and we've got a wonderful jiu-jitsu program. And I'm under Coach Kyle Watson, who's a high-level black belt. He was on The Ultimate Fighter under Coach George St. Pierre. I've had the honor and privilege to actually meet George. What a great guy! And we are on team tag team, so we win a lot of stuff. We grind, and we're all about community. I opened up my gym because I grew up in fight clubs. I mean, you went in and you fought, and it was truly just dark and scary. When I started, it was like my mom didn't want me going. Most people's moms didn't want them going. So I said, all right, Adam, how can I open up a martial arts academy? And I want individuals that are insecure, maybe depressed, maybe a little overweight, maybe in a bad spot. How can I use this martial art to change and help people? And so we wanted a non-intimidating atmosphere where people can show up as they are and learn something that can save their life. And that's why we titled our business Alton Family Martial Arts and Fitness. I mean, we are a family. So that's kind of, my whole life got me to here. It took me a long time to get the black belt. It was hard. Like you say, just they don't hand the belts out. You're going to start out at white belt, and you're going to be there for 2, 3, maybe 4 years, depending on what you do for a living and how often you're there. But you're going to be a white belt for, say, 2, 3 years, blue belt 2, 3, 4 years, purple belt 2, 3, 4 years, brown belt 2, 3, 4 years. And then when you get your black belt, you still suck at jiu-jitsu. I'm sorry. I mean, it's one of those things that the game evolves. And at black belt, now you're trying to, you got a lot of pressure on you now.
Mm-hmm.
So now you're trying to get a little bit better. And then you got the 22-year-old blue belt bruiser that's a competitor, that's an MMA fighter, that's trying to take your lunch from you, right? So it gets harder. So, but it's a journey that I'm madly in love with and I'm grateful for.
Amazing. So one of my mentors and business partners, Alistair McDonald, has his black belt, and it's one of the defining moments of his life. And we talk about this with Jocko. I spent a fair amount of time talking about Brazilian Jiu-Jitsu when he was on stage with me last year at the summit. The big thing that most sophisticated Brazilian Jiu-Jitsu practitioners talk about is that it's a puzzle and it's a mental chess game. And when you are in the flow, you're not thinking about anything else, right? So you're thinking about setting up 3 moves ahead, just like you would in chess. So tell us how that works. I was a wrestler in high school as well, and I felt a lot of that the same way. You put your hand here on their shoulder, and you're actually not just putting it there for no reason. You're trying to set up 3 moves from now because you're anticipating what their reaction is going to be. There's a lot of life lessons there, and business lessons as well, as far as strategy and thinking of your next move, setting up, a potential submission in 5 moves or 6 or 10 moves if you're at a very high level. So tell me about how that's helped you in life in general.
Absolutely. Well, jiu-jitsu gave me a vehicle first and foremost of structure and discipline, and gave me organization. And then it gave me the most important lesson called humility.
Mm.
It gave me humility. So being humble, knowing what others are capable of and knowing what you're capable of are very important things. So it gave me that humility. That's why competing was good. I think I'm good. Well, let's go to Worlds. Let's see how good I really am. Right? Some years I was good. Some years I wasn't so good. But with that being said, it gives you that humility. But yeah, to be able in jiu-jitsu, it's human chess. And yeah, I'm baiting. I'm setting things up. And it's the same thing in business. I'm a visionary, so I see 12 months ahead and I forecast for my team. Here's what we're going to do to get to here. Here's what we're going to do there to get to there. So yeah, jiu-jitsu, I use a lot of parables and a lot of analogies from jiu-jitsu. I wrote a book for automotive, Road to F&I Black Belt. I use parallels to business, to the martial arts, because they're so intertwined.
Mm-hmm.
I mean, jiu-jitsu's truly taught me how to be a more effective business leader, period. On and off the mat. Jiu-jitsu helps you as much off of the mat as it does on the mat. And you said something a minute ago, when I'm on those mats, I could have had as entrepreneurs, you understand, you're putting out fires. Not everything's unicorns and rainbows every day. You got personnel issues at times. You got issues with clients at times. There's the monotony of acquiring new clients, keeping new clients. There's so much going on in life. And then you're raising a family. You got 3 boys. I got 3 girls. It's crazy in my household. The only thing that makes my life sane is showing up to jiu-jitsu, because that 90 minutes when my feet are on those mats, I'm not thinking about my problems, and I'm just getting a little bit better on those mats than I was the day before. So it's therapy. It's mat therapy is what it is to me.
I love it. I was listening to, I just caught this random reel by Faraz, who used to be George St. Pierre's trainer. And he was talking about how he was sitting in an airplane and he put his seat back and this guy that was sitting behind him just punched the seat as hard as he could. And he's like, don't effing put your seat back. And Frost looks back and he's like, are you okay, man? Like, he's got this humility about him, even though he knows that this chubby guy sitting behind him, he could destroy him, but he just has to smile and laugh, knowing that just like a knowing that I'm under control here. This guy has his own problems and I'm not going to make him mine. Right. And it's funny when I have people that are very high level practitioners in any martial art, they do have the good ones, the truly good ones have this different humility and energy about them. And they don't have to prove themselves every time somebody bumps into them at a club. It's just a knowing that if I needed to, I could take care of myself and the people around me. And that there's something very, very special about that.
I agree. Yeah, I think truthfully, I think jiu-jitsu, in my black belt speech, I explained to the entire room that, jiu-jitsu is a superpower. It gives you those things of structure, organization, discipline, better body, humility, all those things. But the same thing that you just described, it gives you the ability to not get involved in scenarios that you just don't need to be involved with. Give people grace, knowing what you're capable of doing. It's a lot easier to walk away from a scenario. Like, I remember being a hot-headed punk years and years and years ago. But jiu-jitsu calmed me down. Mm-hmm. I know what I'm capable of, and it's easier to walk away from a scenario and give grace. Because you know what? That dude that punched the back of the seat, probably having some stuff going on in his life. That guy's probably, there's something that has occurred today in his life or yesterday in his life or something from his childhood potentially that has got him to where he is today. And we have to extend grace, understanding that there's something going on behind everybody's eyeballs, and you're better off just loving on people. And unless with me, you touch one of my kids, there's a problem. Yeah. Run as fast as you can, and I will find you. That's with one of my significant other or somebody in my family or my inner circle. I'm a ferocious wolf. But outside of my inner circle, my family, it's easy for me to say, no worries, all good. See you later.
Yeah.
Dude wants to flip me off on the highway. I ain't flipping you back off. I'm giving you a peace sign. Like, whatever,
I love it, man. I love it. Oh gosh, I'm such a dork when it comes to this stuff. I could talk to you about this all day long.
I love it.
It was fun because I started following Joe Rogan when he was way before he was a black belt, and he's brought a lot of positive press to Brazilian Jiu-Jitsu, as has MMA just in general. Like, UFC has been great with Royce Gracie coming out and kind of showing how dominant it is as a martial art form. And then Jocko now is very mainstream, and he's a Brazilian Jiu-Jitsu black belt. His answer to everything is Jiu-Jitsu. Like, I'm having a hard day, Jiu-Jitsu. I can't figure out like how to control my temper, Jiu-Jitsu. I'm out of shape, Jiu-Jitsu. It's hilarious. But I have a lot of respect for all of you guys that are regular practitioners and have gotten to a high level. So, Adam, I want to bring this all the way full circle. I think you're onto something really cool here with this 831B captive insurance situation. It seems to me like, as best as I can tell, it is a win-win. It's a win for the patient. It's a win for retention within the dental practice. So that's a check mark in the positive, on the positive side for the practice owner. I think that the whole thing where you're kind of being not, I hate to use the word forced, but it is kind of a forced savings / investment program if you want another avenue to be able to take advantage of the miracle of compound interest and a 15% tax deduction as well. It seems like a lot of good things. So I'm going to look a little bit further into it, but I would love for people to do their own due diligence as well with your company. So what's the best way to get in touch with you if they're interested in learning more?
I am very easy to find on LinkedIn and Facebook. I am very active on social platforms. The blue check mark on Facebook. I got a lot of people that impersonate me, and it's for some reason Facebook doesn't want to take the accounts down. But Facebook, blue check mark, LinkedIn, I'm easily to find, and then dentalprotectiongroup.com. Dentalprotectiongroup.com. You can book a demo there. You can write a note. Hey, listen to Adam on the podcast. I'd like to look more. It's easy to find us. Dentalprotectiongroup.com.
Awesome. Well, it's great to get to know you, man. I hope to meet you in person sometime. You should come. I hope so. You should come to the summit. It's in Frisco, Texas, in June. If you haven't heard, I don't know if you're a follower of Stoic philosophy, but Ryan Holiday will be.
Seneca
Yeah.
is my go-to.
Ryan Holiday's our keynote speaker this year, so you get a chance to meet him if you'd like to. So yeah,
Amazing.
We'd love to have you there, and great to get to know you, my friend.
Amen. Likewise, I'm excited. I appreciate your time today. Had a lot of fun in this conversation.
I did too. All right, ladies and gentlemen, the co-founder of the Dental Protection Group, Adam Marburger.